Hello guys, it's Randall with BitRaged. So I'm doing a video for you guys here on trade recap for the month. It's been a really amazing month. There have been a lot of opportunities in the market, and I want to show you some of the trades that I've taken and the reasons behind them. And as you look at some of the trades, you're going to notice some of the reasons why I took trades, some of the really great trades I took. You're also going to notice that some of the trades I took, the entries weren't the best once you see the after screenshot. But you'll also notice that a lot of the trades that I take specific trades in my strategy that I am very confident are either going to at least take me into profit long enough to take a break even, or they'll go and I'll make a good profit. So you'll notice that I took a lot of break evens this month and had some really good runs. We took a few stops, a few losses, but all in all, it's been a really good month. And the title's not clickbait. The percentage is a little bit higher, but that's what is shown in the trade recap. So that's what you guys see. Before we get into that, I do want to talk about the DXY quickly. A lot of people were expecting this to sell for many reasons. You can look at the reasons. But most of the people were not ready for an entry. They didn't know where to take the entry. And that's the difference between, the method we teach and the method a lot of people trade is people don't know when to take entries. A lot of people know that something's going to sell or it's going to be a buy, but they don't know where to take the entries. And if you don't know when to take the entry or when it's going to reverse, it places you in a position where you're more likely to lose. And that can be the difference between, a 60% strike rate, and a 40%, where you're actually losing a lot more than you're winning. So we were anticipating this. I actually took the trade on EURUSD for the inverse retrace right about here, which is right around 97.10. Again, it's the inverse for EURUSD. I will be candid with you. British Pound USD actually took off much better, quicker than EURUSD. It would have been a better trade. I was looking at it. I was going to take an entry on it. I was waiting for it to develop a little bit more. It would have been about a 15 pip. It was an awesome trade. Anyone who got that, congratulations. That was an awesome trade. Again, it's between 11 and 15% even right now, and we still probably have some movement left. So really great trade. We're forming a corrective nature here. We're looking for more downside. We're going to see how this develops. But these are moves that you want to be in on because this is where you bank the profits. Again, it's understanding when to make the entries. So without further ado, let's get into the recap and let's just go over some trades. And we're just going to talk, and I'm going to tell you why I took the trade and some of my thoughts on the trade. So hopefully this is beneficial and you enjoy this. All right, as we start out here, you'll notice that the first week about the first week of the month, I wasn't taking screenshots, so they're not included here. There's a couple percent of profit from that week that's not included in this recap. So there was profit. I wasn't taking screenshots. I was really busy, so I was just taking trades. I wasn't recording them. But I'm not including that in the total or here because they're not trades that I have screenshots of. So that's the only reason why it starts on the 9th. USD yen. So this is a trade. It took about 0.74%. And the reason is I took this trade. Basically, you have this flag type pattern, and it's out of an impulse. It's a very good probability that we're going to move down. We do move into profit, but then we begin to move back up. So I took it on this retrace. I took the profit just because I've seen these play out before, and usually I don't have the lines in, but if you were to draw the line, that just seems like it's just going to move back up, and then I'd take another entry on the drop. So I was just looking for a new entry. I was hoping it would make more downside. It does come back down, but had this moved up to here, I would have taken a break even. So I'm not happy to move 1% into profit and then move back up into a negative. It's just not my style of trading. So you notice most of my stops in this trade recap it's going to average around 20 pips. It's my sweet spot. So Euro Kiwi, this is another trade. It's a flag corrective move out of a retrace and impulse. So I took that here. I could have almost got stopped out on that. You'll notice that it is, I don't have the stop loss pips, but it looks like about 20 pips. And then it moves to 2.2%. I do take a profit on that, on the retrace again, without letting it go back up to take me out. So that's 2.2% I took on that trade. So Euro Yen, this is a trade that was a little more iffy, a little bit more risk going on here. But I took it because it's basically a double bottom. And there's a couple of reasons for the trade. You do have a descending nature here. And even though you had the 3 touches, which the trend line should be moved here. But basically the 3 touches, it does move out. It impulses back down. I've seen this happen before. Then it retraces and then it takes off. I've seen that happen. So I was willing to take a chance on this trade with about 25 pips stop loss. I did end up taking this out. The reason I believe, it was overnight. I didn't want to hold it overnight. It was too close to break even. And I wasn't really confident in putting a trailing stop on it just because it's so close to break even. It did end up going to about 1.9% had I left it open. So I left about, 1.7, 1.6% on the table. But I wasn't willing to take a stop on, or, a loss on this trade. So I stopped myself out. It's one of those ones, again, the entry wasn't amazing. So being that close to profit, had I just moved it to break even, I would have taken break even. So either way. Aussie Yen, descending broadening wedge. It was a fairly good entry. Again, I didn't move my trend line. I don't always move my trend lines before I take an entry, simply because I'm taking an entry and I don't really care. It's an entry that I took. Basically, you have that 4th touch, but this type of entry usually works out really well for me. I do like this, especially on the Aussie charts. I do like these styles. I did take a 0.12%, even though later on it goes into 2% profit again. I believe, this was, again, before night. I didn't want to leave it open overnight. It was too close to break even. And it was forming this very corrective movement I didn't like. And I didn't like the possibility that it just moved up correctively, impulse down, and then went. So I didn't want to take 1%. So I took myself out at 0.12%. Had I not, again, it would have been a break even. So I left 2% on the table with that, but it's one of those trades really, there wasn't a logical reason to stay in my opinion. So that was my philosophy. I was willing to take that out. Kiwi USD. This is a flag-like pattern coming out of an impulse. So on that 3rd touch, we did have a little bit of corrective movement. I took the retrace, a 30 pip stop loss. I felt like that gave me good room in case it just corrected up. I did take a break even on this. The reason is it moves very correctively up, then very correctively down. So had this moved correctively up, I was happy during this area because I knew it was coming down, but what I didn't know was how. When it started moving correctively down, I knew this was coming to the upside. So as soon as I was able to, I took a break even on it rather than taking a stop. And then as I was expecting, it does impulse out, and it would have been a 1% loss. I wasn't willing to take that. But again, this was one of those trades which I was fairly certain. It was a really high probability that if it didn't impulse right out from here, which I really didn't expect it to, it was going to correct for a few hours and then move down. It didn't actually do that, but it did move down long enough to get it into break even, which I was expecting it should. Aussie CAD entry. It's not the best of entries. Again, you only got 2 touches. It's very tight corrective move, but it's coming off from very impulsive movement. So to see this more corrective movement to the upside, in my mind, gives me a good entry, expecting I should get enough downside to at least take a break even. So would I take this trade again? I don't know. It does have that rejection feel. So you got the retrace and rejection feel. I do end up taking a break even on this trade because it's just developing into more corrective movement. So it's one of those things. Had I waited a few hours, it would have formed this corrective move. I would have taken this retrace candle, and it would have impulsed down. I would have taken a break-even sell. So either way, I would have taken the same break-even. That entry would have been more valid. And then the double top, this entry would have been valid as well. So all those would have been valid entries. Yeah, it just develops out corrective from there. So those are all valid entries. It's just understanding the risk involved in each of these. This entry gives me more probability that I'll be able to take a break even. But definitely that would have been a good entry right there. British pound CAD, you have the impulse, the bull flag. You got 3 touches. It's a beautiful entry. I don't think I waited for a retrace on this. Apparently I didn't because it's a bearish candle. But regardless, it does take me for 2.52%. This was an interesting one because you'll notice in the screenshot here, I have the take profit here. I set that take profit. It's because when I do TradingView, for some reason my habit on TradingView when I'm entering trades is just to set 75 pips. That's what I always do, and then I move the take profit, usually immediately afterwards. But on this trade I didn't. I left it at 75 pips. The funny thing is it took me out at 75 pips, immediately retraced, and I would have taken a break even probably if I hadn't, simply because it just retraces. It was an interesting trade. I might have taken about 2% on this if I had been at the computer. Just cashed out with that. But it was just an interesting trade. It was like almost perfect timing. Wicks me out and then drops. Very good. So that was interesting. British pound USD. I liked this trade because it's an ascending channel. Ascending channel with an ascending channel, high probability. You have those triple bottom within a corrective descending channel, which gives me a really good indication that I'm going to have, if I get that corrective movement, which I did, that this is coming back to the downside. Even if it's only long enough to take a break even, there's a high probability on this trade that's coming to the downside. And this is another one that I had an auto take profit, and it took me out early. So I took 1.73% on this. There's probably about 1 to 1.5% left on the table. Again, that was my bad. I should have moved the take profit, but I didn't. Both of these trades, for some reason, I took the trade and I was rushed, so I didn't actually, adjust the trade afterwards. What I usually do, and the reason why I do this is I set my take profit at 75 pips because I like to visually move my take profit on TradingView. That's the reason I do it on TradingView. When I'm just trading in Oanda itself, I set it manually, but I just like doing the visual on TradingView. It's just one of my quirks. And the other reason too is this was an evening trade too. So I probably took the trade, went to bed, and didn't change the take profit like I should have. This was an interesting trade. My trend line is a little bit off. This is just I was expecting this to develop into a large corrective bear flag, just a very large corrective movement to still have downside, because you have that impulsive move, corrective downside. There's a couple of reasons why I took the trade. It does have that double top, but looking back, it's probably not a trade that I would retake. Just looking back, it's probably not. One of the reasons is it does have that arcing nature, which gives me the impression that it could just impulse out of here, and it's just not. It wasn't a good entry. Looking back at this, it really just was not a good entry. This was not a good trade. Not even really sure why I took it, to be honest. I did end up taking a 1% loss on it. Totally expected. It does, like I said, this was not a good entry. And again, my charts on this were completely off. It just was not a good entry. So my notes do say that had I had a larger stop loss, I would have actually been in profit. So the stop loss was too tight apparently. But that being said, still, I don't like the entry. It was not a good entry to take. It was not really that valid in my opinion. So just the way it started to correct, taking this retrace candle would have made more sense. But yeah, it is what it is. So Kiwi CAD. So this is one descending channel. And you do have those, basically 4 touches. I would say 3, because I count those 2. But 3 touches, you have this flag pattern, impulse, flag, impulse. So I'm expecting this to be a flag. Does have that 3 touches. It's a really good entry point. It turns out this goes for 2.10%. I did take a profit on the retrace simply because it was a Friday entry. I've seen these trades over and over where you have this flag pattern, impulse is up, impulse is down, wicks you out, and then it goes. So just a bigger flag, and I didn't want to take that chance. So I took 2.10%. I was happy with that. It does peak at 4%. I probably wouldn't have made it all the way to there. I would have taken about 3. Totally happy to take the 2.10%. British pound CAD. Again, you have that flag, impulse, flag pattern. Very nice. You have 4 touches, really good entry. It is a little bit bigger stop, and it doesn't even cover as much as I would want it to. Regardless, I do take a break even on this. I closed it manually at a break even simply because I didn't like the feeling, and also, yeah, it was weekend coming up. I didn't like leaving that open weekend. Again, the volatility on open, it's just a really high likelihood of getting wicked out and bye-bye. So I took a break even on that one. Euro Kiwi, this one actually, okay, so if it had, yeah, over the weekend, if it had opened, it would have taken a 1% stop loss, so I actually prevented that. Euro Kiwi, this was a little bit more messy chart, but it does have that overall flag feeling. You could take a trend line from here all the way across. That would definitely be valid to look at it as a flag. Does have 3 touches on this area of corrective movement. You do got that retrace. I took it for about 35 pips. I do get tagged out for 1% stop. It's just one of those ones that, you know, there was about 5 to 8% potential in this trade. I was willing to take the risk. I knew it was a little bit more risky of a trade, but it did have that overall larger flag. Now, you have to keep in mind that sometimes the overall bigger pattern plays out. In this case, it did, and we did get that sell. There was volatility. I believe it was on the Kiwi side of things, which actually triggered this sell. It's one of those things that happens. I don't really care too much. It was a 1% stop. It's just the cost of doing business. British pound yen, you have that impulse, small correction, and the larger correction. These play out really well for me. It seems like, especially on these pairs, it really plays out well. So 3 touches, and I don't usually knock the wicks out when they're this small, so I wouldn't recommend taking this approach. But on this, I did just because it fit. The smaller stop loss worked for me, 15 pips, and this was a really good trade. Now, it did take me out for 1%. There was 2 reasons for this. The first reason was I took this without it fully retraced, so I didn't wait for the hourly retrace. Had I waited, this would have wicked up, it would have turned bullish, and I wouldn't have taken the trade. So this was, I said it was a valid entry, and it would have been, had it been an hourly retrace, which it wasn't. I didn't wait. I should have. The other thing is, again, there was volatility. Again, I do believe it was on the yen side. I don't remember. There was volatility, and that was the reason for this impulsive movement. Again, had I waited for the hourly, it wouldn't have been an hourly retrace. I wouldn't have actually taken that trade. So it's keeping those things in mind. Sometimes we take trades preemptively, like, okay, it's going to go, you know. That would have been a valid trade had it been an hourly retrace. So again, it was a nice format. Just should have waited. If I had waited, I wouldn't have taken the 1% stop loss. So that's just, you know, even though this is something that, you know, we all do sometimes. Sometimes I take trades without waiting. Most of my trades, I wait for the hourly retrace. It's what I teach. Sometimes I don't. I like the feeling, and I don't take the trade. Wait, because I don't want to take an entry down here with a 25 pip stop loss. That was the main reason why I did this. What happens? I take a 1% loss. So sometimes you have to weigh the risks there. I'd recommend waiting for the hourly retrace. Again, this is another trade I didn't wait for the hourly retrace. This one actually works out for me. So Aussie CAD, I don't have a picture of it, but took out for 1.99%. I didn't wait for the retrace on this one either. So it was, yeah, I didn't wait. I should have, but I didn't. It was just one of those ones, 3 touches. I took it. Again, this is really not, we do have that retrace candle there, but because it turns around, I should have waited for a corrective movement. I didn't. It's one of those trades that I really saw potential in this for an upward move. About 5%, I took it for 2%. Kiwi USD, it does have that double top, which is the reason I took it. It does only have 2 touches on the trend line, but it has that overall corrective move. And then it has that arcing nature double top, which really often gives you a good entry point to at least move into profit to take a break even if you don't get a good profit. I did take 2.3% on this trade. Trailing stop took me out for profit, so I was far enough in to take a trailing stop, and trailing stop took me out for profit. So it turned out to be positive, so apparently this turned around. So that was a good trade, 2.3%. Euro USD, so you have this overall corrective movement up, a bigger corrective movement, and I took it on this correction retrace on the bottom. So you have a number of touches here. It felt like a good trade at the time, and it pans out to be 5.59%. So I got tagged out somewhere in there. So I was expecting a bigger correction, so I did take profit on that. It does move to 12%, but it does very correctively, and if I had stayed in, I would have had to almost come back to break even, and then it'd go to 12, and that's just something I would never do. So I would have waited and taken another entry on that. So it was a good trade, a really good trade on Euro USD. I really liked that trade. On Kiwi Yen, you have, this is another one. It's a decent entry, but it's not a great entry, okay? So it's just the start of this correction. If it had moved down and up another time, it would have been a much better entry. So something to keep in mind. 20 pip stop loss. I do take it on the retrace. It does have that more ascending corrective nature next to the trend line. You'd have 3 touches, so I did take it for that reason. I do take a break even on that, and it does move into profit, but it does end up moving back up and wicking me out. So it does continue to about 4%. I probably would have taken it for about 1% profit if I'd left it open, simply because of the nature of how it moves. There was 4%, so it went to 2%. This was overnight, so that's what happened overnight. So this stuff happened overnight. I didn't have time to, or the opportunity to put a trailing stop on it. Otherwise, I probably would have taken profit. Euro USD looks like a tight bear flag. DXY correlated. This was one of those trades that it was a valid entry. There was nothing wrong with this entry. It was a very tight correction. I probably even could have done a 15 pip on this, but in spite of being a good entry, I did take a stop loss on it. So I did take it before bed. Had I been up, I would have taken a break even. I never would have taken a loss on this because it does move down and then it moves back up. So this could have been prevented had it been during the day. All right, Kiwi CAD. So 3 touches. Again, it's ascending, broadening wedge. I like these a lot, especially when they come out of impulses. I really like these. It's a 3rd touch retrace. It's a 2nd retrace candle. It's not my preference. I had to take a bigger stop loss, 30 pips. Otherwise, it would have been closer to 20 pips. I do take a loss on this. The reason why is it was an over weekend trade, and it just wicked me out. Like, you'll notice here, the wick doesn't even touch my stop loss, but due to volatility coming out of Sunday opening, it wicked me out and it hit that stop loss just due to volatility. So it's one of those freak of nature things that, you can't really do anything about. It does go in about 5%. Again, this was a very valid entry. Don't let that put you off that I did take a stop on it. It was a valid entry. This should have been 5%, okay, or close to it. It's just one of those things. Sometimes it happens. You can't do anything about it. Looking back, would I have taken this entry still? Absolutely. It was a good entry. There's nothing wrong with this entry whatsoever. So it is what it is. The only thing I would change, if I could change anything in hindsight, I would take this retrace instead of that one, or that one down there, and I would still be in the trade. But it doesn't put me off whatsoever. Euro USD, this is another one, 20 pips. This is 15-minute chart entry. I was just trying out some 15-minute entries, and it has that bull flag nature. I did take a break even on this trade. It does move into profit, but again, this was during the night, so I had to set to break even, probably somewhere in this area. Didn't have time to set a trailing stop at that time either. It moves to about 2%, then it takes me out for break even. So there was another 2% that I left on the table. It's one of those things, what are you going to do? I could have taken it, put a trailing stop on it, and I probably would have taken some profit anyways. But it was not a good area to put a trailing stop on. All right, Aussie Kiwi, another 15-minute entry. The only reason I took this is a very tight ascending corrective nature. And the stop loss is too big as well. Stop loss should be smaller than that. But I took a break even on this one. It does end up moving into profit and probably about 1.5%. So it did what I expected. I just was not comfortable when this bullish or this once this bearish candle retraced back into profit, I took the break even at that point. So it was volatile during that hour, took the break even, and then it does this. So not a big deal. USD yen, 15-minute entry again. I took that basically on the retrace here, and it has that arcing nature as well. I took this for a break even. You'll notice that it does kind of move correctively along that area. It was something that could have panned out, could have played out. You do have the trend line, the 3 touches on the trend line, the bigger trend line, and then this ascending corrective nature out of an impulse. So it could have panned out, but I took a break even. Double top as well, and it broke previous high. So those were good reasons to take this entry, but break even was the right entry, or was the right move in the end. British pound, Kiwi. So you have this descending nature within a descending channel out of an impulse. It looked good for an entry to the upside. I do take a 2.1% on this trade. Manually close a trade as triple touch a trend line, could be a bear flag. So I was looking at this possibly as just a bear flag to move lower. You have to consider all the possibilities. I wasn't willing to take a break even when I was to 1.1% in profit. All right, Kiwi yen entry, another entry, nice impulsive movement, very tight corrective, really nice. I really do like this entry. Nice stop loss, 15 pips. I love it when I can get those tight. So it was a good entry. I did only take a 0.64%. It should have been a break even probably. It was in 2.9% profit while I was away. Then I manually closed it at the worst possible candle. I don't know why the close screenshot is not here, because I did take one, but it went on to 4.6%. It was bad management on my end. So the reason I didn't take a good profit on this 0.6% isn't great. It was just bad management. I did a really bad job of managing it. I was away. I came back. I closed on what looked like a really bad situation, and it was just really bad management. I should have left it at break even, but it is what it is. So USD yen, second entry for the day. So I took 2 on USD yen. Very corrective ascending nature coming up towards that trend line. You have the multiple touches. You break the previous high. You have the double top. I do take this for 2.68%. I get this retrace, waiting for a new entry on that. It did appear like it could be forming a bigger flag, and there's multiple reasons for this trade. This was a really good trade. You can see here 3 touches. You got the impulse, that correction, which moves into a bigger correction. It's just a really good entry. So I really was happy with that. USD CAD. This is another one. Yeah, I did another one that I don't have the close on it, but this was a break even. It does end up moving higher, so it moves down. I took a break even on it, and yeah, it was the right move. Kiwi Yen. This one was a nice flag. That was a beautiful flag. In fact, this was the entry. I did miss that entry. That was a great entry, but they had the flag, and then the second flag. This was multiple good trades. So 3 entries totally could have had on this. Yeah, so that was really good. Just a really nice tight flag. I took this for 5.4%, and as it starts to correct down, I closed it. Had I stayed in, the trade corrected down to 1.3% before then moving to almost 10. Would you have stayed in all the way? It's one of those questions you have to ask. Why would you stay in and give back 4% to the market? I wouldn't. It does move back to 10%. I could have got back in. Sometimes you do, sometimes you don't. It was a really nice trade. 5.4%, I was happy with that. Euro USD, descending nature within a descending correction. Very tight. You have that, again, that arcing nature. It impulses down, and I'm just expecting this is going to complete the pattern and then move to the upside. What does end up happening, you will never know. Well, actually, this trade I'm still in. This trade is running about 5 to 6% right now. It does appear to be forming a correction. I'm still in the trade. I had 2 positions open for Euro USD. I did close one of them, and I had USD CAD open yesterday that actually closed at break even. If I had left that open, it would be in profit today. It actually would have been a good trade. It just, because of my management style, I did end up closing it. So it is what it is. But this is 5% right now, I believe, that I'm in, and this is not counted in the total. So the monthly profit is 25.49%. Again, I didn't count Euro USD, so if I close that, it's going to be 30%. The running profit left on the table, this is all the profit that because I closed too early. So that's 19% just because I closed trades too early. So that's a ton of profit left on the table. That takes the 30%, it moves it to 50. It's just a massive psychology thing there. Running loss prevented from early stop was 7%. So I prevented 7%, but by closing too early, I left 19% on the table. Now you have to keep in mind, some of these trades, they correct back, that you have 3% in profit, they move down to break even, and then they go. So sometimes there's no way you would take this out, but some of it I could. The reason why I calculate that is because then I can go back and look at the trades and say, yeah, you know what? I should have left that trade open. There was no reason for me to close that so early, and some of the trades I took this month that I closed for like 0.6%, it's like, should I just have left it at break even and maybe I would have taken a profit. You have to reevaluate and see. So 13 winning trades. Again, this doesn't count the first week. It doesn't count the other Euro USD trade I took yesterday, or the USD CAD trade. Both of those were break evens. So it should be 10 break evens. Then plus the first week, there was a couple break evens. Losing is a total of 5 for the month. Winning is 13. And again, I do not believe 13 counts this, but I'm not positive. So again, counting the open trade for Euro USD, that's 30% for the month. I'm happy with that. This month there was a lot of opportunities. There's a lot of trades I didn't get. For instance, British Pound USD, that would be another 11% that I would have taken out. I just didn't take it because I was already in USD, or I was, it was one of those things. So this video is a little longer. I understand that, but this video is focused at the members, the Slack group, those who have bought the course. It's for your benefit. So if you're watching this and you're new to our method of trading, then I would encourage you to check out bitraged.com and look at what we have to offer. But this is mainly for the members, just so you can get an idea of the trades I took. You'll notice some of these trades weren't the best trades. A couple of the entries weren't the best entries. And that's why, I grow every month. So I get better and better and better. And there are trades that today I won't take that 8 months ago I would have taken. And then there's trades that today I will definitely take that 8 months ago I wouldn't have. So you get better and better. There's no reason in the world why you can't make a profit trading. It might take you time. It might take you months. It might take you a year to learn it. But there's no reason why you cannot be profitable trading. And the reason why I did this trading recap is to show you that. You'll notice that my trades, not all of them are perfect. You notice I took losses. You notice I took a bunch of break-evens, 10 break-evens this month. And I'll actually change that. 10 break-evens. It happens. But when at the end, with all that factored in, you're still hitting 25, 30%. This should be 30%, with this trade here. Is that something you're willing to put the time and effort in? Are you willing to put in 6, 8, 12 months to master the method to get to the point where you're bringing in 25 to 30% a month, or 50% or 100%? I know people that last month did 75%, 50%. It was in the market. There was the opportunities there. So don't let anyone ever tell you that there's not enough opportunity or there wasn't enough good entries. They're there. It's just mastering the method and learning how to take the profit out, learning how to get those entries and to understand a really good entry and a not so great entry and the entries that allow you to take those break evens. Because, there's 10 break evens here. Those turning into actual losses cuts into my profit quite a bit. That changes that 25% into 15%. It's still a good month. 15% is good, right? But it's not as good as it could be. So being able to take those break-evens rather than taking the full stop, it's just understanding, when to do that. So hopefully this has been beneficial to you. Hopefully you enjoyed kind of hearing me go through my trades for the month and it was beneficial to you. If you have comments or questions, feel free to drop them below. Check out bitraged.com and sign up to learn how to trade. This is, I believe, the best method to trade because it teaches you how to trade the market, how it moves. Markets move in patterns. And if you can understand how those patterns form, why they form, and how they play out, then you can start making those trades that will bank you those 5, 10, 15%, 20%, 30, 40% months. It's possible. It's just putting in the effort. If you aren't going to put in the effort, you will never make it. Thanks so much for watching, guys. I wish you the very best in November. November is going to be amazing. There is so much potential coming up in November. Going into 2019, there's massive potential. There's some really big patterns that are going to play out. You'll notice DXY is coming to the downside, but it is going to turn around and move to the upside as well. So there's going to be massive moves to the upside for DXY. You're just going to want to be ready for these. And to be ready for them, you need to understand how the market moves. So take it easy, guys. Thanks so much for watching. Have a great